So in this video, we will take a look at my top 3 TradingView indicators. And all of these indicators are beginner friendly, but they are also used by professional traders. So yeah guys, I really hope this sounds interesting, and real quick before we start here, I just want to give a disclaimer that this video is for educational purposes only, and nothing in this video is financial advice. But alright guys, now let's get started right away here. Alright, so indicator number 1, the relative strength index. So let's take a look at the relative strength index, or the RSI. To open the RSI in TradingView, you go up to the left corner where it says indicators, and you type RSI in the search bar, and you will have the first thing that pops up here, the relative strength index. So the RSI is what you can see here on the bottom. And what does the RSI tell us? Well, the RSI measures momentum. And easy put, we can say that momentum is the velocity of the price movement. So how fast is the price going up, or how fast is the price going down? When we have been having a very strong impulse to the downside, we will have very low values on the RSI, and the opposite is true for the upside. So when we have been having a fast and strong movement to the upside, we will measure high values on the RSI. We won't go into too much detail on the indicators in this video, but the RSI can be used in many different ways. One way to use the RSI is to use it to identify overbought and oversold conditions. So as you can see here, if you look down to the RSI, you can see that the RSI oscillates here in between 100 and 0. So the RSI can never be higher than 100 or lower than 0. And one common RSI strategy is to look for sell opportunities when the RSI goes above this 70 mark, and look for buy opportunities when the RSI goes below the 30 mark. When it is above 70, we say that the stock or crypto or whatever is overbought. And when it's below 30, we say that the asset is oversold. And as with pretty much all indicators, it's always recommended to combine them with other technical variables. For example, support and resistance, candlestick patterns, divergences, and so on and so on. Another way to use the RSI is, as I mentioned just recently, that we have something called divergence. And divergence is basically when we have the price going in one direction. So as you can see, for example, here, you can see that the price of the USD measured in euro made consecutive lower lows right here. But at the same time, the RSI made higher lows. So in this case, we have a divergence between the price and the indicator. We have a divergence between the price and the RSI. And this is what we call a bullish divergence, indicating a potential reversal here to the upside. So there are many different ways to use the RSI, for example, divergences, overbought and oversold conditions, and so on. But these are just some methods. One last thing I can mention here regarding the RSI is that mine here is a bit customized. And if you want to customize your own RSI, you go down here to the down left corner and you press settings. Then you will get a window here where you can customize it. For example, I choose the color orange here. And you can, for example, choose if you want it to be more or less invincible. You can choose the thickness of the RSI. I usually have it a bit smaller, but for video purposes and so you guys can see, I chose it to be a bit larger, but now a bit smaller. But alright guys, so now we are ready to take a look at our second indicator. The next indicator we're going to take a look at is the MACD indicator, which stands for Moving Average Convergence Divergence. And to open the MACD, we once again go up to the left top left corner. We press indicators here and we choose the top built-in here that says MACD, and then we will get our MACD indicator right here. So the MACD is also a momentum indicator, meaning that it measures, how strong the price movements are either to the upside or to the downside. But the MACD is different from the RSI and it uses different methods to calculate momentum. As you can see here, if you look down to the MACD, we can pop this one up. The MACD actually consists of, first of all, we have two lines. As you can see, we have one blue line that is called the MACD line, and we also have a orange line, which is called the signal line. And the MACD line is calculated by taking the 12-day exponential moving average and subtracting the 26-day exponential moving average. And that will give you the blue line. And the orange line is a moving average of the blue line. So this can sound a bit complicated. And if you want to dive deeper into the MACD, I actually have a video about that, and I can link it up in the corner in the eye. But we have two lines right here. And you also have, you can see this sort of mountains and valleys here. You can see the red and the green parts. These are called the MACD histograms. And they basically represent the distance between the blue line and the orange line. So when we have a large distance between the lines, we will have large histograms. So for example, as you can see right here, we have a very large distance between the lines. This will give us a very large histogram, and so on and so on. One method to use your MACD in your trading strategy is to use the MACD crossover strategy. So that is basically that you sell when the MACD crosses the signal line to the downside. So for example, right here, I hope you can see, the blue line crosses the orange line here from above. And this would give a sell signal right here. And after, in this scenario, we actually got a downforce after this one. And for example, and the opposite is true for buying signals. When we have the blue line crossing the orange line here from below, like we have right here, this would give a buy signal around here. However, this is a method I don't use personally, and a lot of traders avoided this simple method because it will give you lots of false signals. So if you're gonna use this one, you probably want to combine it with other, technical variables, as with most indicators. Another way to use the MACD is to use divergences. When using divergences, I prefer to only look at the histograms. So if you want to customize your MACD, you can go down here to the left, down left corner again. You click the settings right here. And if you go to style here, you can see that we have histogram, MACD line, and signal line. I usually have both of these unchecked and only look at the histograms, because the histograms actually give me pretty much all the information I need here. And one example of a divergence is right here. From this high to this high, you can see that the price printed a high at around the same level. But if you look down here to the MACD, you can see that the MACD prints a lower high. So this is an example of a divergence between the price and the MACD, indicating a potential reversal here to the downside. And after this divergence played out, we actually saw a pretty respectable force here to the downside. But as I said, if you want to learn more about the MACD, make sure to check the video out. Alright guys, so now we are ready to take a look at the final TradingView indicator. And the final trading indicator is the candlestick pattern indicator. And to open this one, we go once again up to indicators right here. We search for all candlesticks. And then we have something called all candlestick patterns. And this is an indicator that will automatically find Japanese candlestick patterns here on the chart, and it's a very useful tool here in my opinion. So for example, BE here stands for bearish engulfing pattern and is a pattern indicating a potential reversal here to the downside. The D here stands for a doji, the BE is a bullish engulfing pattern, and so on and so on. One thing we can notice here right away is that many candlestick patterns, if you use them alone, will give false signals. So for example, this bearish engulfing pattern didn't give a very clear force to the downside, and here we have lots of bullish engulfing patterns that didn't cause any strong reaction. That is why we want to combine candlestick patterns with, for example, support and resistance, and perhaps even indicators such as the MACD or the RSI. But let's take a closer look at this candlestick patterns tool. So to do that, we'll go up here to the left, to the upper left corner where it says all patterns, and then we click settings. And if we go to inputs here is where it gets interesting. And here is actually where we can choose our candlestick pattern. So as you can see, all of these right here are different candlestick patterns. And if you're looking for example, only one specific pattern, let's say, for example, we only want to look for doji candles, then we uncheck every candle except the doji, like we have right here, and we press OK. So now the only candlestick pattern that will be represented on the chart are doji patterns. So as you can see, we have, for example, one doji there, one doji there, one doji there, and so on and so on. If you're looking for another specific pattern, let's say we only want to look for, hammers, then we press the hammer, we check the hammer, and we press OK. So this one, as you can see, looks to be a bit more rare, but one example of a hammer was one we found right there. If we look left here, we can see that we found another hammer right here. And in this case, this was a good hammer, because if you have been watching my videos on the hammer candle, you know that we want a hammer to appear after a strong decline. If the hammer doesn't come after a strong decline, then it's not a valid hammer. So that is definitely something to look out for. So this leads to another important point about the candlestick pattern tool, and that is that the tool will identify some patterns that are more significant and some patterns that are pretty much no significant at all. So this is not a magical tool. When you use this tool, you still need to, on your own, identify what patterns are actually, valid and what patterns should be ignored. But alright guys, that's pretty much it for this video. If you feel like you got any kind of help or value, then please consider dropping a like. And if you guys are interested in more, then don't hesitate to subscribe and hit that notification bell. I hope you guys have an awesome day, and I hope I will see you guys in the next video. But for now guys, take care. Ciao, ciao.